Today is Wednesday, November the 15th, 2023. How many Canadian REITs are going to kill distributions? We're going to look at another victim in that sector. Also, we're going to cover a huge deal in the materials space. There are more job losses in the financial sector. Ontario is changing its law to help job seekers. And we're going to look at some of the latest earnings. Let's get started with the news today. It has been a tough year for the REIT area here in Canada, and now adding to the pile is a True North Commercial REIT, so TNT.UN. It's announced that it's going to be suspending its monthly distributions, and on the news yesterday, shares fell almost 23%. Now this morning, as investors are digesting the news, the shares are back up in the 25% range as I'm filming this video today. The company operates REITs mostly in Ontario, but it does have operations in 5 Canadian provinces. It attributes the fall in net operating income to increasing vacancies post-COVID, also to, as we might guess, financial or higher financing costs. The company reported its third quarter earnings on Tuesday. It noted that occupancy rates are down from 97% pre-COVID to 93% today. Now, during the news release, True North also announced that it is going to be consolidating its shares. So for every 5.75 units you own now, those will be converted into 1 unit. And this is an effort to distance the share price, which is really low today, from that penny stock status and hopefully boost some confidence. As of this morning, the shares are trading at around $1.36 Canadian. Earlier this year, in March, the REIT had already slashed its dividend by 50%. Year to date, the shares are down in the 75% range. Teck Resources announced yesterday that Glencore, which is the Swiss commodities giant, it has agreed to buy a majority stake in Teck's steel-making coal business for $6.9 billion US, and that will give them a 77% stake in the business. As part of the overall transactions, it's going to sell the rest of its steel division to Nippon Steel of Japan and to South Korea's POSCO. The total transaction will be $8.9 billion once everything is wrapped up. Now, Deputy Prime Minister Chrystia Freeland, she says that the deal will be very closely watched. In fact, she used the term scrutinized by the federal government, with a particular emphasis on protecting Canadian jobs, maintaining a Canadian headquarters, and also she talked about environmental concerns and the rights of the Indigenous people. The government basically wants to make sure here that the deal is a net benefit to Canada at the end of the day, and also will be assessing whether it passes a national security test, as they always tend to do on these big international deals. On either of these two main factors, the government has the right to reject the transaction. Now, while Teck says that it's confident of ultimately obtaining approval, given the lengthy review that needs to be completed, it's expecting that the transaction won't close until the third quarter of 2024. As we've seen recently, the financial space has been aggressively trimming jobs. First, we heard of big layoffs from the banks. We saw Royal Bank, Bank of Montreal, we saw Scotiabank announce layoffs. We also recently heard cuts at IA Financial, at National Bank. Now, Manulife has joined in the trend, and a spokesperson for the investment management division of Manulife said on Tuesday 250 jobs have been cut from its global wealth and asset management division. This equates to roughly 2.5% of the staff in that unit. Job cuts include employees in Canada, United States, United Kingdom, and Asia, but there was no specific breakdown as to how many Canadian jobs would be affected. Now, for perspective, Manulife has around 40,000 employees worldwide. If you are an investor who just likes to keep up on all of the happenings in the investment world, look no further than the social app Blossom. The community is now around 60,000 strong. It's growing, and I know there are some very exciting plans coming up in the next couple of months. So if you're not already a member, it's free to join. Just download the Blossom app, set up a profile. Be sure to follow me if you do. My username is Mark B, so MARCB. You can keep up to date on my holdings and also the trades that I'm making. The government of Ontario has announced that it will be introducing new labor laws that are going to force employers to disclose salary information when they post job openings. And one of the major objectives here is something that was designed to help job seekers and taking much of the guesswork out of what the salary expectations could be. And the example they give is it's very common when a prospective employee is asked in an interview, for example, what kind of salary they would expect. Obviously, they don't want to say something that's too low and shortchange themselves. But on the flip side, if they ask for too much money, then they could be, running the risk of being rejected. So it's hoped that posting these salary ranges are going to help employees by reducing the stress also having more information for them. So when they are going out and selecting prospective jobs, they are within the salary range that they actually need. These, of course, would come back to depending on what their own personal circumstances are. The move does echo similar legislative changes that were made in both British Columbia and Prince Edward Island over the past 18 months. Let's move on and look at a few earnings. And shares of Target were up around 17% this morning as it reported its third quarter adjusted earnings of $2.10 per diluted share. And that's up from $1.54 a year earlier. And it did also substantially beat analysts' expectations, which were $1.48. Revenue from the quarter, that was $25.4 billion. That's down from $26.52 billion a year earlier, but it did beat the analyst expectations of $25.24 billion. Target says that it expects Q4 adjusted earnings to fall between $1.90 and $2.60 per diluted share. They also noted in the reports that they are seeing a trend where shoppers are keeping purchases more to the necessities and they are postponing other purchases while waiting more for sales. Home Depot also reported its third quarter numbers, and the company said it earned $3.8 billion. That's $3.81 a share. That's down 12% from the $4.3 billion it earned a year earlier. Analysts had forecast earnings per share of $3.76. Revenues slipped 3% to $37.7 billion, which is slightly better than the forecast of $37.6. Sales at stores that have been open for at least a year fell 3.1% as a slowing housing market continued to be a headwind for the company. Same-store sales, they have now been down for the last 3 consecutive quarters. Now, CEO Ted Decker, he said that the company saw continued customer engagement with smaller projects. He did notice that there is a pressure on the big ticket discretionary categories, so that's causing a decrease. Smaller ticket items. Compared with Q3 of last year, purchases over $1,000 were down 5.2%, again, as the housing market slows and consumers are tightening their belts. Loblaw reported here in Canada just this morning. They reported Q3 2023 revenues of $18.3 billion. That's up 5% versus the $17.4 billion in revenues in 2022. They had a slight beat of expectations of $18.21 billion. Net income was $624 million, $1.95 per share, and that compares with $559 million or $1.69 per share last year. Adjusted net earnings of $719 million, $2.26 per adjusted diluted share. Q3 2022 earnings were $663 million and $2.01 respectively. The company reported a 4.5% increase in same-store food sales and a 4.6% rise in same-store retail drug segment. It also said in its full-year outlook that it expects retail business to grow its earnings faster than sales. It expects adjusted earnings per share growth in the low double digits. Coming up for the rest of the week, we have Walmart with its earnings report tomorrow. Also, Alibaba will report. I do this segment on Mondays and on Wednesdays to keep you up to date with the latest important trending news. If you're not subscribed, I would invite you to do that right now. I will also put a link in the description of this video for our Investing Academy. I would ask you to go check that out. As always, I'll thank you for watching this video. I do look forward to seeing you in a few days.